Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. We'll also take a look at year-over-year revenue growth in NVDA. Ryan, it's great to see you as always. Welcome back to Trade Talks, and another volatile week in the Nasdaq-100, of course, the markets overall.
Yeah, markets overall, and with QQQM down over 6%, S&P 500 down over 3.5%, and S&P 500 value almost down 2%. But in the little observation period from week to week, we started off on a tough foot with the Target and Walmart earnings kind of weighing on retailers broadly, and that spilled into growth stocks. And within Nasdaq 100, we saw a little bit of relief on Monday as NDX traded higher by over 1.5%, but certainly not enough to overcome the weakness from last Wednesday. But today we're seeing some green on the board after the release of the Fed minutes from the May meeting. And I think when you read through, not a ton of new information, but the Federal Reserve officials felt largely comfortable with the pace of 50 basis point rate hikes over the next couple of meetings. They deemed that pace to be appropriate. And I think that the thought here is maybe a more aggressive stance up front will give the committee more flexibility later in the year, effectively saying they can see what's going on with the policy decisions and the effects that those decisions are having on inflation and the broader economy, and then sort of reassess the strategy going forward, which again all leads back to the Fed's policy of being data dependent. Some little tidbits of information that we saw them increase their inflation target for 2022 to 4.3%. They're at 2.5% for 2023 and 2.1% in 2024. So seeing some of those inflationary pressures moderating next year and into the following year. Of course, they in the May meeting, the FOMC finalized plans for the shrinking of the balance sheet. So we're starting here next week on June 1st. We're starting to see the treasuries decline by 30 billion a month, rising to 60 billion a month come September. Mortgage backs are going to roll off at 17.5 billion per month, eventually increasing to 35 billion in September.
All right, Ryan, if we take a look at sector performance, what do you see there?
Yeah, most of the sectors in QQQ and S&P 500 were in negative territory for the week. Outside of utilities, energy, and real estate, of course, energy and real estate QQQ does not have exposure to. So, again, you saw the aversion to growth. You're seeing folks kind of move to the more defensive side of things, and particularly with utilities as the best performer.
And Ryan, let's talk about NVIDIA. Clearly, one of the pandemic darlings. I mean, even before the pandemic, when you think about everything that's been going on with crypto mining and video cards, I mean, they really have been in the sweet spot.
They have been, and I think NVIDIA, it's certainly kind of I would classify it as a Nasdaq 100 heavyweight. It's been a very big driver of performance over the last number of years, and tonight the stock is scheduled to report earnings. Year to date through yesterday, the stock's down 45%. To your point, this was an example of a company that sort of rose to prominence on their PC gaming chips, but really kind of diversified their business lines into autos and their graphics processors being used for cryptocurrency. Adjusted EPS estimate for tonight is $1.30. Revenue estimate at $8.1 billion. That metric to keep an eye on is the data centers. That revenue estimate is $3.62 billion. We've seen halfway decent results from some of the chip makers. It will be interesting to see if NVIDIA is able to continue its strong run of earnings releases. You can see here from the year-over-year revenue chart that the revenue growth that it's experienced is well above or at the high range of pre-pandemic levels. So, I think you look at some of the stock performance, particularly on some of the chip makers, really walloped on this growth aversion. Interesting to see how NVIDIA has been faring as they report earnings later after the bell.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.